Viewers, welcome to our continuing coverage on the budget. As you know, on Sunday, the Finance Minister, Nirmala Sitharaman, will be tabling the budget, and the world's eyes are very closely focused on that budget. India is the fastest growing economy. A lot of capital is waiting in the wings to invest in this country of ours, but the FM has to make it attractive. So she has to come out with something that in this broken world where there is rampant tariff-related instability, India is a guarantor of returns. Viewers, the global economy is fractured, trade rules are being rewritten, tariffs are back as weapons, and Donald Trump's aggressive trade posture is once again unsettling global investors. The signs are all there and they're visible on your screens. Capital inflows are volatile. Trade uncertainty is only increasing. For global investors, Trump's tariff threats mean uncertainty, higher costs, disrupted supply chains, and volatile capital flows. Emerging markets are being reassessed, not just for growth, but for resilience. In this broken world, India stands out. As of now, strong growth, political stability, and a large domestic market make it attractive. But investors are asking tougher questions. Can India absorb global shocks? Can it diversify trade? And can policies stay predictable? This is where the budget becomes critical. All eyes will be on the finance minister in the hope that she can deliver predominantly investor confidence. The checklist, of course, remains lengthy and expectant. But in a broken world, credibility and consistency may matter more. And we're going to ask some leading global economists and top analysts what they want to see the finance minister doing. Let's open this conversation up. Let's go straight across to Daniel Lacal, chief economist of Tressis, who's speaking to us from Madrid today. As I told you, this is a global panel. Klisman Murati, managing director of Pareto Economics, speaking to us from London. Mr. Murati, let me come out to you first. What do you make of the Indian economy as things stand?
The Indian economy has been shaped by drivers which has done nothing but help its trajectory over the last 20 years. With such a young population, with such a technically capable population, devised into industries which are seeing untold growth over the last 20 years, mainly in technology and manufacturing services and products.
It's done a good job. But coming into this new era, which is shaped by uncertainty and also shaped by very, very volatile political directions, especially from the West, India needs to do, I think, two things. First of all, they need to decide which investors they prioritize, because not all investors want the same thing from the government. If we were advising the government, and if we were to shape the future of India, what we would advise is for the government to focus on domestic growth of its consumer market so that there's less reliance on volatile access points to foreign markets. This will take time to do well, but it is a very good way to hedge these international risks, these financial and geopolitical risks over the long term, whilst at the same time increasing GDP per capita and increasing the quality of life for their people inside the country. We've talked to a number of businesses and business associations about this, and everyone agrees it should happen. But I think this direction should be taken by government firstly to ensure that this is one of their primary aims as a government over the years, to empower the middle classes so that it becomes a consumer base which people want to sell into and not only a manufacturing base that they sell out of.
Let me bring in Daniel Lacal, a chief economist with Tressis, who's speaking to us from Spain. The pictures that we're showing are of the EU chief in India talking to Prime Minister Modi, finalizing and announcing what they have called the mother of all trade deals. Why do you believe the world wants to trade with India, specifically when people like President Trump have come out and said, well, India is a dead economy and needs us more than anyone else, and so on and so forth?
Well, I don't think, obviously, that India is a dead economy at all. It's actually the fastest growing economy in the world, and is the economy that is going to help the world grow in 2026 by a percentage that would be close to crisis levels if it wasn't for India. No, I think that the European Union needs to present a very, very convincing package that allows this trade deal to happen for a very important reason. The biggest disadvantage for India is the recently adopted CBAM agreement by the European Union, which is this package that basically charges the CO2 emission cost to the border of many of the countries. So it would be great to have a trade deal that, on the one hand, lifts the exceedingly protectionist measure that is the CBAM, and at the same time delivers on the strengths of India, which are technology, a young population, incredible improvement in productivity, and obviously the rising demand for all of the things that not only India is producing, but the incredible human capital that is very, very helpful also for the services industry. So I think that India will be very benefited by a trade agreement with the European Union, but it needs to be exceedingly worried about the CBAM, because if you sign an agreement with the EU and at the same time you have a massive tax burden on the border because of the CO2 emission charge, that is likely to diminish the positives for the Indian economy and for the European economy as well.
Well, yeah, so I was trying to look at the larger picture, of course, not the nitty-gritty. Clearly, signing a deal with India means that the world still believes that India has a lot to offer. Mark Brolin, economist and geostrategist, who joins us from London. Let me ask you this. In this fractured global economy, clearly India is being seen as a relatively safe bet. But is that confidence real, or is it conditional? And if it is so, on what?
I think it's absolutely so, in several ways. I think this budget is in some ways more about the narrative than about the details you mentioned before. Obviously, investors will look to things like predictability on capital gains tax, regulatory clarity, and things mentioned before. But I think the big narrative is that India has been actually a big player for a long time, but perceptions take a long time to shift. And this budget might establish the narrative that makes the rest of the world understand that India really is a top player. I think this even makes the Western world concept kind of obsolete, since India is turning into one of the key players in the democratic world, economic world. So it's integrated already, and it's benefiting, as you have been saying several times, it's benefiting from the turmoil in the rest of the world. And even if I think this budget might be a little bit boring, besides for those of us who actually like budgets, but I think it will be boring in the sense that it will be predictable, and we will get things done in a number of areas. But so the big story for investors elsewhere is will it be predictable and boring and move in the right direction? And if that happens, India from now on will really be the top dog, or one of the key top dogs.
So let me build on that. William Lee, Chief Economist and Managing Director at Global Economic Advisors, speaking to us from Los Angeles. Thank you, Mr. Lee, for making the time. But when global investors look at India's budget, what matters right now? Giveaways and stimulus, or policy stability and predictability? Predictability is something that Mr. Brolin emphasized.
Absolutely. And India has been viewed as a land of potential for sure, but it's been a land of potential for decades. And how does India actualize that potential? It has yet to do so. And the budget, I think, is one way of doing it. India has to establish a clear marketplace for foreign investors to come into India with which to produce and also to sell. It has to be a two-way street. So India has to allow in foreigners to be able to sell in their marketplace. As far as the budget's concerned, in order to really actualize the potential for India, the budget's been expansionary for quite a while now. You've got deficits as a share of GDP of well over 8-9%, and it's coming down, and hopefully it'll come down to about 7 or 6%. But then again, it has yet to be done, because I think a lot of the fiscal policies have not been targeted. A lot of the social spending have not been well spent. So I think the investors, in order to really be convinced that India's potential be actualized, is going to have to see a lot more effective set of policies where the Indian marketplace becomes realized and India becomes a place to invest, not only to produce for its domestic marketplace, which is huge, but also for the global economy as well, as an export center for the rest of the world.
Spyros Margaris, venture capitalist and renowned AI expert, who's speaking to us from Switzerland. As I said, very broad-based geographies. Needed to ask you this question. In a world of trade barriers and turbulence, now we know that long-term capital flows more towards countries perhaps with strong technology, innovation, and the like, rather than just cheap manufacturing. India brings both to the table, but we're seeing still not that enthusiasm globally for investors or among investors where India is concerned. In fact, the numbers, foreign investment into India has kind of tapered off a little bit. Why is this?
I wonder myself, but I think it's a perception that it's more difficult to deploy capital in a way that it's easier to deploy it in America or somewhere else. But in this geopolitical environment we're in, I think India will have another opportunity now to take advantage of it. I mean, I'm a big fan of India. I mean, I visited it. I was invited by Prime Minister Modi, and all the things the gentleman said today, I mean, most of them I have to agree with. I mean, and I think it needs to rebrand itself even more of a technology center, not only of an amazing talent pool, well-educated people, but something more like a Silicon Valley of India. And obviously, it's the companies within a country that basically are the best ambassador for other people to look at and say, hey, maybe we missed something. Maybe there are other players out there we should look at. And obviously, like America, with all the issues we might have, has more ambassadors that basically imply it's a place to invest. But I think that will change. And India changes in a way that we don't see it coming, but all of a sudden we see the fastest growing economy, or those great numbers, a focused, stable policy management by Prime Minister Modi. I think that's what people are seeking more than anything else, especially now, where before we didn't even appreciate it as much because you thought volatility is part of the market. But all of a sudden, we seek out places to invest where we can invest and believe that our interests are also protected as much as the interests of the country.
So now let me ask each one of you to offer a prescriptive note to the FM. Assuming you were all FM for one day, what are some of the things that you would have liked to see going into this budget? So, Mr. Murati, beginning with you first, what would you like the FM to do on priority?
Look, as I said at the very beginning, you need to distinguish the investor base, because foreign investors are going to ask for different things than domestic investors. For foreign investors, taking down tariffs on car manufacturing imports into India is the best thing in the world. Why? Because now companies like VW and others have a market that they can sell into, which helps their economies, manufacturing base, and employment in their countries, if we can see more demand in India for these products. But if you're a domestic car manufacturer, this is bad news for you, because now you just increase competition overnight. So what the finance minister must do is figure out which investor base is going to serve the interests of the country over the next 50 years, and not which investor base should we make happy due to short-term pressures and needs. That's the one thing that will decide a country's future, and its success, because the finance minister is there to serve the interests of their people, and they must think in first principles in how can we make this more sustainable over the long term, given the volatility, and also given how different investors have different incentives and different motivations and want different things from a finance minister.
Mr. Lakal, over to you.
I think that the finance minister should be very, very focused on bringing down the deficit to a manageable level, because that is going to be a big driver of the perception of the stability of the economy, but also of the risks of further tax hikes. No? So I think that managing the deficit, having a good balance between welfare spending and a tax burden that does not continuously rise and increase the risk. And I think that the budget has to be, on the one hand, expansionary from the perspective of continuing to deliver on the improvement in welfare and the reduction of poverty, while at the same time incentivizing the investments that you just mentioned prior. So I think that's basically going to be about the deficit, because if the deficit is too large, it doesn't matter if the tax wedge today is relatively acceptable, is that people are going to perceive that there will be much higher taxes in the future. So I think that, that combination of confidence in the future with a very strong delivery in the present is what makes India so attractive for everybody right now.
Mark Brolin.
Yes, I think two things are essential. I think the finance minister is actually making India into a blueprint for self-reliant yet globally integrated economy. And I think the key to, I think that's a fantastic ambition. So the key to this happening is actually delivery. So delivery is I think, a key object. But the second object is, I agree with Mr. Magaris in Switzerland, that AI is sort of shifting, is going to shift everything. So that will be key to everything. So I would like to see, I would have liked to see perhaps even more than we will get incentives for startups. I don't think the AI. I disagree with some to see we should have big big state-led AI investments. I think it should be the startup scene that has to be encouraged by tax incentives and that kind of thing. If that happens, we will see so many AI companies coming up, and that will. I mean, as he was saying in Switzerland, I think that's why the US is still in the lead. It doesn't matter what happens in the White House, because AI is so important. Silicon Valley is much more important than what happens in the White House.
William Lee?
India is a place where capital can come, but capital has a lot of choices to go anywhere in the world. The finance minister's got to ensure that capital can be used most effectively in India, and in order to do that, it's got to make sure that its domestic market is strong, and that means not just the size of the deficit matters, but the efficacy of spending is really critical. It has to be able to ensure that the safety net for India is a solid one and an effective one that allows the marketplace to start to grow and grow effectively. As far as the export market is concerned, India has got to make itself much more attractive to foreign investors to ensure that India will become a space of manufacturing and the factory to the world and a competitor to China. That's really India's objective going forward, and the finance minister's got to form its budget and tax policy in a way to guarantee, in some ways, to foreign investors that coming to India is a good deal as opposed to going somewhere else, because capital goes to wherever it's used most effectively.
Spyros Margaris. I think you're on mute, sir. Yeah.
Thank you. Sorry. I will disturb the others. I think the most important thing for AI to deploy the future is electricity, and for the manufacturing. So India can't put enough money in power plants and electricity, because if you don't have this, it's like you have a toy without battery. So you have double down or triple down on electricity and whatever it takes in this infrastructure play in order to provide for manufacturing and for AI cheap opportunities. I think that's the most important thing. As much as it's not the most obvious thing, and that's why China has an advantage over America. It's not the language models, is the abundance of a strong infrastructure.
So the FM must focus on infrastructure and perhaps make the economy a lot more predictable, by bringing in some reforms that attract capital. Okay, I'll leave it at this, gentlemen. Thank you. It's been an enlightening conversation. Thank you for taking the time out.